Apple pulled down its online storefront without warning. When it came back online, prices across the Mac and iPad lineups ticked upward in one of the most drastic adjustments in company history. The MacBook Air saw a $200 premium. In India, the Pro jumped 70,000 rupees, a 41% surge for hardware sitting on shelves yesterday. Retail tech usually follows a downward pricing curve. Aging components get cheaper, scaling up current generation costs by 40%. This price shock is the first major structural crack in the consumer market caused by the massive, insatiable hunger of artificial intelligence data centers. Morgan Stanley is calling this phenomenon chipflation. To see why this is happening, we have to look at the silicon inside your machine. Every computer requires DRAM, dynamic random access memory. This is the ultra-fast, short-term memory your device uses to keep apps running smoothly. A standard consumer laptop operates comfortably with 8 or 16 gigabytes of RAM. But the hardware required to train a large language model exists on a different scale entirely. AI server clusters require terabytes of ultra-specialized high-bandwidth memory, known as HBM. These dense blocks of silicon are much more complex and expensive to manufacture than the memory found in a typical tablet or laptop. Tech giants like Microsoft, Google, and Meta have begun writing blank checks to memory manufacturers, attempting to hoard every available high-margin AI chip to build out their data centers. Because the world's most powerful companies are buying up the limited supply of advanced silicon, everyday consumers are now forced to compete for the same physical resources as trillion-dollar AI developers. Semiconductor giants like Micron, Samsung, and SK Hynix only have a fixed amount of factory space and raw silicon wafers available. These manufacturers have to choose between producing low-margin RAM for consumer electronics or ultra-high-margin HBM chips for NVIDIA's AI server architecture. The factories have shifted their production lines away from standard hardware to feed the AI market, resulting in a severe supply drought for the components used in your devices. This factory pivot caused standard RAM prices to shoot up by 98% in the first quarter of the year. The cost of the basic chips used in a MacBook or iPad has scaled up six-fold in the last 12 months. Current estimates for the next quarter show another 60% sequential spike. The AI boom is actively cannibalizing the physical resources required to build everyday consumer technology. This isn't just an Apple problem. Dell, HP, and Lenovo have all issued warnings to shareholders that rising memory costs are compressing their profit margins and will likely force price adjustments across the Windows PC market. The pressure has reached the gaming industry as well, with Microsoft recently implementing price hikes for its Xbox console lineups in several global markets. Notably, Apple has left the iPhone lineup completely untouched during this sweeping price correction. As Apple's primary revenue driver, the iPhone is being shielded. The company appears willing to sacrifice its margins on Macs and iPads to avoid the consumer backlash that would follow a mid-cycle price hike on its flagship phone. However, that protection is temporary. The upcoming iPhone 18 will require significantly more RAM to handle localized, on-device artificial intelligence models. Analysts at the IDC and other industry trackers predict that the standard $50 to $100 price increases are a thing of the past. We are likely looking at a new market standard where flagship models launch with a $150 to $200 price bump. This is the physical reality of chipflation. The massive infrastructure needed to power the virtual world is now acting as a direct tax on the hardware in our pockets.